Okay, welcome to the stage analysis weekend video. It is Sunday the 15th of August 2021. So we're going to break this video up into two parts, as the first part of the video is for non-members, and then the second part of the video, which will cover the major indexes, sectors, market breadth, and the weekend's watchlist stocks in more detail, will be for the Prime Traders Club members. So if you're not a member of that, then check us out at primetradersclub.com/stage analysis. But otherwise, for non-members, we're going to start with this week's best looking stage 2A breakout, which is on Unity Software. So this broke out this week following an earnings results, which were on Wednesday, it seems. So we go down to the daily chart to start with. So you can see this has been forming a classic Wyckoff structure within its base for the last 5 months or so here. So you can see this is our potential stage 1 base that we had. So we go back to the daily here. You can see we had a selling climax followed by an automatic rally and then a secondary test. So that's your phase A area in the base. Then we had some testing in phase B, but we had a shakeout move down here and test, and then it followed through. So that was a secondary test in B as a shakeout and test, as it undercut the low of the base and looked like it was potentially breaking down into stage 4, but then quickly reversed back out again. Then had a higher low test there and then followed through. So you have a few potential Wyckoff method entry points in there on the test and on the follow through on the spring itself. And then we had an early last point of support in here as it formed around the 50-day moving average. And then you can see we started to get some structural change in here as we had this minor sign of strength rally back to the top of the range. And as you'll notice from the ATR bands here, so these are the three ATR bands. So the 21-day EMA is the dotted line in the middle here. Then you have 1, 2, and 3 above and below. So you can see when you're in a downtrend on the daily, you generally don't get above the +1 ATR level. We didn't have any closes above it. And you can see as we moved through that last point of support in June here, we started to get some closes above the 1 ATR level. It pulled back to the 21-day EMA, and then we had a significant bar here before it rallied up in this minor sign of strength towards the top of the range again, before falling, rolling back over again back towards the 50-day moving average, and then undercutting that and forming another last point of support, which was around a similar area to this. So the low in here was 92.20, 92.25, and this low was at 92.50. So slight higher low, not quite a local spring on that one. So a last point of support on here, and then a higher test and follow through another significant bar here on higher volume. So a significant bar is when it's above 1.25 times the average average daily ATR. So that's what we consider a significant bar, and obviously on heavy volume as well. And you can see we've been trending up above the 21-day EMA and started to touch the top of the 3 ATR bands again as we've moved out in a full sign of strength rally, which is now, this is our phase C, and then we've moved out into phase D. So this is on the weekly chart, the stage 2A breakout. So from the earnings results on Wednesday, and you can see this heavy volume that's coming on here on the earnings results, which was more than 3 or 4 times the average daily volume there. And you can see we've moved strongly, around 15% since that near-term pivot there from the earnings results. We're getting back towards the top here with resistance from the December-January upper range here, which formed initially following the IPO advance phase. So this range here, so if we go back to the daily, you can see we've got resistance around the swing lows of this at 135.51, 135.20. So you can see the channel line is also rising up into that area as well. So around the 135 area, we've got some near-term resistance in there. And if we look at the point and figure chart of that, which is here, you can see that level clearly here with these O's here. So 134, 136 there. So we've got a small level of opportunity before we hit an area of potential resistance after this initial move. So often with a stage 2A breakout, so if we go back to our weekly charts, so the stages are determined on the weekly charts. So Often with the initial stage 2 breakout, you'll get a big initial move. We're looking for more than 2 times the average weekly volume on the breakout. We're looking for relative strength versus the S&P 500, which is this. So you divide the S&P 500 divided by the stock, and we add the zero line, which is a 52-week RS moving average. But obviously we haven't had 52 weeks of trading yet. I believe we've had 47, maybe 47 periods of trading so far, so we're not at a 52 week yet, but we are making some higher highs in the relative strength here as well, and we've got more than 2 times the average weekly volume here. If you use the 10-week moving average on the volume, it's about 1.97, so it's pretty close on that. But the 4-week, Weinstein specifies the 4-week average for that, but I tend to prefer a higher number. So you generally want the volume to stand out on the chart and be dramatic. But that's pretty good. This was this week's best looking stage 2A breakout. You can see you want to see the moving average flattening out or rising on the move into stage 2. If it's still declining, or the breakout happens below a still declining moving average, then you're not in stage 2 at that point. So you need to see the moving average start to turn up. So as I said, we've got this near-term point of resistance coming up around the 135 level here, which we're not far off of now. So we're only 5% above that. So the next point of entry in Weinstein's method is what's known as the stage 2 B entry point. So not to be confused with stage 2A and stage 2B in the actual stages. So it's actually better to use Wyckoff terminology in this and we just call it the backup. So in Wyckoff's method, it's just known as the backup following the breakout. So we're looking at if we start to move into this near-term resistance here, and then we start the back up towards the breakout level. So our stage 2A breakout pivot was at 114.14 there. So if we pull back into that range, 10 to 13% pullback once it starts to top out, or if it meets resistance and starts to roll back over into here. So we'd be then looking for it to a constructive pullback on lower volume, or consolidation, or higher consolidation up here on lower volume for it to tighten up before then moving out to higher highs. So either pull back in and not going back into the base again, holding the top of the stage 1 range and starting to base around this 115 to 120 area in there, or a higher base in here in this 130 to 135 area, which it could potentially stall out and start to consolidate up. So again, if we go back to our daily, you can see on our channel there, if we get up into that area and start to roll back over again, we could potentially, with this 21-day moving average moving up and the 50-day moving average moving up, some sort of moving back into this area in here. So pulling up into there and then pulling back into the 120 to 130 range would be very constructive. So you can see if I stick a Fibonacci level on that quickly. If we go all the way to the top of that, just as a quick, you can see the 50% pullback would be right at the breakout level there at 114-ish. So that would be a logical point for the backup to form. So we'll be keeping an eye on how that develops. If we go down the time frames, and you can see how the stage 2 breakout moved on strong relative volume on this intraday time frame. You can see we broke out of this constructive consolidation base in here as it was in its early stage 2 range on the 2-hour time frame. You see we had a stage 4 into a stage 1 and then a stage 2 breakout. It started immediately basing after the breakout, and this is what backing up action can look like on any time frame. So this is an equivalent of the backing up action, and then we've had a continuation breakout on the earnings results on strong relative volume, and this now gives us this is a significant range with all of this volume. So you wouldn't expect it to fall back below this area. Now you would only expect it to dip below briefly, but you wouldn't expect to close back below this, and that would be considered a failure. So with this moving up strong, you can see the depth of the thrust is getting shorter on these bars. So we had the big price spread on the initial earnings results move out there, and then you can see the thrust has been shortening as we've got towards the top of the range and approaching the resistance. So expect some consolidation or backing up action soon. And for this ideally for this volume to be much lighter. So you'd want to see on the pullback the volume to be below average. So the average at the moment there 752. So you'd want to see it lower down here. So the red bars, for example, in here, you'd want to see similar to that, to compared to what we've had on the up volume to show that people aren't selling out. So with the stage analysis method, one of the things that you need to do when looking at stage 2A breakouts is to look at the group, the index, and the major indexes themselves. So the NASDAQ composite, for example, is a good index to use for a stock like you, as it's in the software group. So the NASDAQ composite covers more than 2,000 stocks, even up to 3,000 stocks. So it's a very good major index to look at for that, or the S&P 500. But basically you want to see the market in the stage 2 advance, which we are. We're still in late stage 2. We did have a stage 3 range starting to develop there, but we've made a continuation breakout to new highs, consolidating at the moment. But we're in what's considered to be stage 2B, which is late in the stage 2 advance. And then what you also want to see is the group to be moving strongly as well. So Unity is in the software group. I believe it's 3D software. So it helps make computer games, etc. So this is, as you can see, this is in a strong stage 2 advance and still near the highs. So we've got the major index in stage 2, and we've got the group in stage 2, as well as the stock now moving out into stage 2 itself. So another thing that we can do is to project. So with Weinstein's method, you've got ways of doing price targets, which could be a measured move from the base. So simple measured move off of this one from the base would be to 76 to 114, which would give you 76. So 114 76, 38 to add on to 114. So a simple measured move would take you up to 152. So that's from the base if you use that method. Another way you can do it, which I prefer to measure a base, is what we call the cause in the Wyckoff method is called a point and figure horizontal count. So you basically use the point and figure chart. You set the scale to a uniform measure. So in this case, we've used, because it's gone through. So when you're below 100, the traditional scaling method will be 1, and when you're above 100, it will be 2. So I generally always take the higher one when it scales to two scaling methods. So on this one, I've used a 2 box size for the scaling method, and it's a free reversal chart. So how it's calculated is you find the last point of support. So we use our daily chart for this. So we've got our last point of support here, happened in July, and then we go back to our selling climax, which happened at the start of March there. So if we look here, you can see we've got 7 is July and March is 3. So the last point of support is here at 94, and then the count line counts across from that back to the selling climax, which happened in March here. You see, which gives us 17 columns. So a quick way to count across is just to do it in 2. So each, because it goes from the zeros to the 0, you count from the X's. So that's 2, 4, 6, etc. So you can quickly count across the rows. So we've got 17 on the count line there. And then you also go down to the spring low, if it's had a spring, or the lowest low within the base, and measure from there. And this gives you our target range. So within here, we've got 17 columns with a 2 box size by free reversal. So our last point of support was at 94, so here, and our base low was at 76 down here. So we've got 17 times 2 times 3 is 102 to add on to each of those. So target A is added on to the spring low, which is 76. So 76 plus 102 is 178. And then target B is added on to the last point of support, which is here at 94. So 102 and 94 is 196. So that gives us a projection up to 196 divided by 94. Yeah. No, where we are currently. Sorry, I'm not doing it from that. We'll do it from the top of, either do it from where you are currently, which is 12887, or from the actual stage 2A breakout point, which is at 114, 116 there. So I'll do it from the top of there just to give a general rough area. So 114. So we've got around 70% or so calls from this initial base. So anywhere, and then from the low was a little bit less. So 50 to 70% calls built up from this base. And you could actually, because there's a higher last point of support up here before the breakout, you could actually take a deeper count, a much longer count across here, which would give you another few columns in there, which would make the count much higher. And I think that I did do that, and it projected out to around 100% from the entire, but that's what we call the preliminary supply, and that's the last point of support there. So your count line would go across from 104 all the way across to here back in February. But I prefer to take a smaller count first, and you could even take a smaller count than that, and just from the more recent base in here. So you could just go across from this last point of support across into this more minor base, which if we go back to our daily chart, in here would just be this smaller base in here, and that would project you up into much more likely into where we are currently. So let's have a quick look at that. So 2, 4, 5. So 5 times 2 times 3 is 30. So 30 onto 114, didn't I? That's 114. So that would give you this smaller base here would give you up to 114, which is similar to the actual vertical target, which comes from this bar here where we had the initial double top breakout. So that's the vertical is calculated from this the size of this one, and that goes up to 142. So 114, 142 from both the vertical and the horizontal on this shorter term base here. So that's our, as we said, we've got near term resistance at 135. So if you had a potential overthrow over the top of that resistance, then into that 140-ish area would be a logical place for it to meet resistance, and then potentially for it to start the backing up action. So that's what we'll be looking at from that. But this shows that it's got a good potential cause. So we look for the cause and effect. So there's no time scale on price targets, and like I said, you should always take the smaller targets first. So we've got our smaller target up into the near term resistance, and then once that's met, you can then, when it starts to form a base in here, you can get a reaccumulation count, and then generally that reaccumulation count often will give you a very similar target to your bigger count, and then that is like what we call a confirming count. So that's one to watch out for. So at the moment, we're still waiting for this to hit some near-term resistance, and then watching to see how the consolidation or the backing up action forms, and that will give us a potential low risk entry point if the backup is constructive. So just because it's had a stage 2 breakout does not mean that it's a definite buy, obviously, because at this point you've missed the ideal entry point, as you've only seen it at this point after the breakout, and it's already moved significantly through that breakout level. So you're already 12% above the breakout. So you don't really want to jump in at this point, because your ideal entry point for the stage 2A breakout is through here. So for those that are more advanced, you would have identified the stage 1 base forming, and then you would have potentially been able to get in the later part of here as we start to see the last point of support and start to follow through in here, or even as low down in the spring and follow through down in these areas down here. So the Wyckoff method helps you get in this later part of the base in action, so in phase C in here especially, and then into phase D. So but now that we've already made the stage 2 breakout, it was on an earnings move as well. So at this point now, your next low risk entry point is on the backup or consolidation if it starts to consolidate at a higher range up here. So, and that would give you a low risk entry point if the backup is constructive. So yeah, don't just dive in. We need to wait for a point of support to form. But with this significant sign of strength bar here, you wouldn't expect the price to move back below that level again. So any backing up action should hold above this bar and not close back below it. So at the moment, we've got, if you did dive in at this point, as you'd still have 13 or 15% risk, which is quite high, really. You don't really want your risk to be much more than 10%, and ideally 5 to 7% if possible, or even tighter if you can, by getting in using intraday methods. to get much more low risk entry once you start to see the backing up action forming and the volume tightening up. So if we look at the earnings for this, I might be able to give you better on the actual blog actually. So I did a blog post on the Stage Analysis website. So for those of you that want to read through this as well, so I did a fairly detailed blog post talking through it, showing the marked up charts and the intraday charts and the group and sector charts again. So you can look at those in more detail, the point and figure target, horizontal price target, and the explanation of it. And we also got institutional ownership from gurufocus.com, which I find really useful, as you can see, similar to what you get on the Market Smith charts, where you can see that funds are coming into the stock, and you want to see this to have a strongly rising trend. So you can see since the IPO date last year, it initially dropped off, but it's had really strong growth, and we're up to what we're up to now. It's risen 179% since the IPO last year, and it's almost at 25% institutional ownership, when it was all the way down in the single digits at the start of the year there. If we look at the annual fundamental and future estimates on this as well, so if we zoom in on this a little bit, you can zoom in on this a little bit here. So you can see on the Fundamentals Explorer from Interactive Brokers, which I find really useful. You can see the earnings per share growth projected for the next few years. So it's not expected to be profitable until 2023, but as you can see in here, we've got projected continued strong revenue growth through the next few years. And for this, I like to see if you use the cancelling method, for example, you want to see 25% growth per year. So with this, I generally look for it to be around 100% over in the next few years or so. So you can see moving up to 2,000 million there, from currently 2021 projected to be 1,000 million. So we're around 100% gain on that. So that should easily meet our 25% growth target on the revenue. And you can look at other metrics as well, but those are the only two that interest me most when I'm quickly looking through, because Wyckoff and Weinstein don't really focus on the fundamentals. So it's more of a cancelling trait. So with that, I just want to see strong growth in the earnings and in the revenue, and ideally it becoming profitable if possible, and already being profitable. Okay, I think that will do for our coverage of you. I'm going to that's the end of the non-members content. So for those of you that want to become a member of Prime Traders Club, you can go to primetradersclub.com/stage analysis and join. And if you don't, then I obviously post lots of free content on Twitter and on the Stage Analysis website. So that's all free to use, and there's plenty of resources for you to learn more about stage analysis, as well as I also have a course on Udemy, which is pretty cheap for you. So if you want to learn more about the stage analysis method, then go to the website and click on that link, and you can find the stage analysis course where you can learn more about the 4 stages. Okay. Let's move on to the members content.